Countries and companies alike are racing to embrace ESG conscious investors and net zero targets, but digging into the details, the pledges rarely live up to their promises. CNBC's Christina Partsinevelos investigates.
Now more than ever, companies and countries are talking up their green credentials, pledging to become net zero or carbon neutral. But when we dig into the details, the pledges don't always live up to their promises. Simply put, net zero is the balance between the amount of greenhouse gas produced and the amount removed from the atmosphere. To reach that balance, we need to make up for the amount of CO2 we emit by investing in carbon offsets like planting trees, building wind farms, or using carbon capture. But definitions vary across the board.
There is a fear that by making a long-term commitment to net zero, but not filling in all of the detail about exactly how that's going to happen in the short term, that companies and countries are sort of pushing off to tomorrow.
But how achievable are these commitments? Carbon offsets avoid the release of additional carbon dioxide into the atmosphere by preventing deforestation or supporting renewable energy projects. But research shows less than 5% of offsets actually remove carbon dioxide from the atmosphere. And an Oxfam report calculated the total land required for planned carbon removal and found it could be 5 times the size of India, or the equivalent of all the farmland on the planet, which means achieving net zero emissions isn't so black or white.
I think there are some, forced commitments, forced by shareholder pressure, forced by media, which are not supported by action plans. And that's got to change. I mean, unless we have clearly actionable, measurable targets with people spelling it out in every last detail, we're just not going to get there.
A pledge that doesn't include meaningful reductions could increase the risk that catastrophic climate change will become unavoidable. And critics argue it's not as hard to make a pledge towards net zero if companies can set the parameters for it. Back to you guys.
Yeah, Christina, it would seem to be another area for the SEC to try to exert its will in terms of creating more transparency and or at least data that can be believed, given just how many assets are reliant at least on some idea here that you're going to be following ESG policies.
Yeah, and think of the accounting nightmare going forward when you have to calculate the carbon offsets for every single step of your supply chain. But it's still very ambiguous, much like those ESG scores, which is why the EU and, like you mentioned, the SEC are looking into this matter. It's just a matter of how detailed are they going to be with the restrictions going forward, and how soon will companies instill this in their operations going forward.
Christina Partsinevelos, great reporting. Thank you.